everyone went, oh shit, tariffs, they're inflationary. The dollar screamed higher, rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017, and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
USM2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does, not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So, look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. So this one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place.